Good morning, everyone. This is Daily Trading Analysis with a quick market update for today, in which we are going to cover yesterday's FOMC interest rate decision that, as you know, the FOMC, the Federal Reserve, skipped a hike. It was a pause, it was not a hike as expected. And first, before moving into the technical analysis for today's price action, I would like to review a little bit of yesterday's economic outlook. We have at this side, we have the economic projection of June of 2023, and at this side, we have yesterday's economic projection. So starting with that, the first thing that a lot of analysts highlighted, and you have to really make sure you are understanding, is the change in the projection for the GDP in basically for the future. So we went from, in June, we came from 0.4 higher for 1.0 on the increase on the GDP growth. Yesterday, we from the 1.0, the Federal Reserve put higher, increase the estimate to 2.1%. And as you know, growth means that the economy is resilient. This is due to the fact that consumer spending is really strong, and also that labor market is holding pretty tight. So this is the first thing that you have to take into consideration. GDP outlook and projections are going higher to 2.1%. Really change are surprising. I think this is positive. But as always, we have to also look for unemployment rates. On the June projection, we went from 4.5 to 4.1, so lower employment. The Fed already was seeing signs of strengthening in the labor market, but now we are going from this 4.1%. Yesterday, they revised to the lower 3.8. So we went from 4.5 in June to now 3.8. So they are acknowledging that the labor market, the employment rate is really strong. So they were expecting higher unemployment. And right now they are lowering the projections, 3.8%. And now the big important thing, the PCE inflation and core PCE outlook. The first thing that you would notice is that the PCE from 3.3 in March was revised lower to 3.2, and from that 3.2 they increased again 3.3. This is basically an increase due to higher energy prices, in a specific crude oil prices that are really ripping to the upside. That's for the headline general inflation, but if you focus on the core inflation, at this point they went from the 3.6 to 3.9, and from that 3.9 they lowered the expectations, the projections, to 3.7. So they are acknowledging that the core PCE part of the inflation is decreasing. These are good news. They are seeing progress. But the federal funds rate, remember that they provide projections for the current year, 2024, 25, and the longer term. Let's focus on that funds rate, the terminal rate, because for the current year, these are bad news. From March to June, they increased to 5.6, and they are still seeing that 5.6 for the current year. They are not lowering the projections. They are not seeing any interest rates cut. That, I think, was not expected by the markets. That's why we sold off as big as we did yesterday. But not only that, for 2024, in March, we increased to 4.6 for next year. And for that 4.6, they increased again 50 basis points to 5.1. These are bad news. Bad news for next year. They are seeing higher interest rates. And finally, for the 2025, they are also seeing instead of the 3.1 for March, they increased to 3.4, and for that 3.4, they increased again to 3.9 in 2025. Basically, in the longer term, in the long run, they are seeing the same kind, obviously, as equal as 2% as possible, but the curve that they are seeing for the projections for these years is not as lower as that was before. They are increasing the projections for the interest rates, and this is due to the strength of the labor market and the consumer spending. Obviously, inflation is going to come down finally to that 2% or near that, but the pace of that is not as expected. And that's why they are saying higher for longer. And certainly these levels are going to really put a lot of stress and pressure to the economy. That's the summary of yesterday's for you to understand what exactly are the numbers that we are seeing. Another thing that I would like to mention is that how the policy members see the inflation. In this side, we have these guys. So we have these 12 policy members, FOMC members, seeing a hike. Sorry, a pause, not a hike, excuse me. They are seeing another interest rate. And then we have these guys, 1, 2, 3, 4, 5, 6, 7 guys. So 12 out of 19 are seeing higher interest rates, at least a new hike. So be careful with that, because there's still plenty of room for another hike. Jerome Powell said that obviously another hike, 25 basis points, is not going to change or to destroy the economy. It's not a matter of that. It's basically that they are still waiting for that kind of data until the end of the year. So they are still leaving the door open for that. And there's a lot of FOMC members that see that. So it's not only Powell, it's not 1, 2, or 3. The majority of the FOMC members are open to another rate hike. That was the last thing that I would like to mention. So now, moving into today's data. Today's data, it's obviously related with jobless claims. Sorry, it's right here. Initial jobless claims and continued jobless claims. Today's continuation to the downside is not only due to the projections from yesterday, but also because we were expecting higher and higher jobless claims. And again, we got lower and lower, another sign of strength in the labor market. So still, remember that Jerome Powell, the Federal Reserve, are already acknowledging they know that consumer spending and labor market is quite strong. That's why they increased the GDP growth forecast for next years. But that it's against our battle to inflation. So they are adjusting the interest rates higher for longer years, for longer time. That's the key thing that you have to understand. It's as simple as that. Now that we covered the fundamental things, now let's go to the charts, because we are seeing something really, really interesting. Remember that we were coming into this descending and compression. We rejected in number 3, and from yesterday we got this rejection on FOMC, big red candle, and this is basically a rejection to the downside. I was talking about this kind of rejection in my weekly recap weekend video on Saturday, and we basically touched this specific zone. But don't get me wrong, we are far from expectations in the market, but this level is 15,000 and it's already providing signs of support. We have also this kind of level down here at 14,800 that we didn't cover yet, but pay attention, because it's not everything as red as it may seem. We still have this kind of support available, and let me show you something, because we are already seeing, this is the green area that I'm watching for support. We are still in that area. We went through all these 30-minute sell-off yesterday, and today we are seeing continuation. Honestly, today is quite choppy, as you can see, but we are in this green area. We are in this blue line daily level. And the most interesting thing that TradingView in this chart, I cannot show you. You have to trust me on this. I have in my Tradeovate account broker, I have the cumulative delta for interest in contracts. Let me tell you that Nasdaq right now is seeing positive delta in this area, and also S&Ps are seeing positive delta in this area. And this is a divergence, a bullish divergence in the cumulative build of contracts got on the ask for buyers. So we are seeing market buyers pushing, trying to absorb this kind of move to the downside in both S&Ps and Nasdaq. This doesn't mean that we are not going to continue selling off, but I'm seeing an interesting bullish divergence in an area in which I think long-term buyers are willing to buy and to support, despite the fact that we got fundamental data that is supporting downside potential. So just a hint, just something I'm seeing. This is not subjective, this is facts. I'm seeing a bullish divergence in the delta throughout all the day in this downward pressure. I'm seeing positive delta, market buyers absorbing the downside move in both Nasdaq and the S&Ps. That's one thing. Another thing that I would like to see, or I would like for you to see, is that after this big move on the dollar, look at this and where we are seeing this resistance. Honestly, I didn't book any trade, I didn't take any trade in the dollar, but this was quite clear, super choppy, but quite clear that buyers were stepping in on the dollar towards against the stock market. And now that today we reached this level of 105, 106 that I was looking forward since we started breaking this range in 102. I think if dollar starts seeing consolidation and starts pulling back, and maybe we are seeing again at 104, the stock market can pick up again a little bit of bounce relief. We have still to see if this kind of move to the downside continues. This range is quite important, and overall this 14,800, but I think we have still potential to at least surprise some shorts. And obviously, if this does not happen and we start rejecting here, we are going to see potential to the downside, but we have to reject 15,000. So now that we have all information, the first thing, cumulative delta, bullish divergence on both Nasdaq and S&Ps, and also the dollar, it's finding its final target. I think a lot of people is going to at least take some profits up here, so we can have an opportunity for a good spot even for long-term swing trading in both markets, Nasdaq and S&Ps. It's clear that financials are not good, sector fund performance is not good, and we are still seeing crude oil, well, we are pulling back. I adjusted the fib retracement again from here to here, so I expect buyers to wait for a good price around this clear level of support around the golden pocket on the fib retracement 61.8. So crude oil is going to pull back, dollar is going to pull back, gold, it's still, gold is super interesting. Look at this compression. This compression is, oh boy, it can go up or down, but we certainly are going to have a clear direction on gold that it's usually against higher interest rates. So if gold is supposed to feel the weakness, but looks like it's still compressing. So quite interesting market. So overall, bullish divergence at this support level on the Nasdaq. Dollar pulling back. Crude oil pulling back. And yields are obviously at super high levels. I'm just saying that we may have some kind of bounce of support bids for higher time frames for people willing to invest and swing trade for the long term. In terms of day trading, it's clear that today Nasdaq is quite choppy, but we might be seeing some kind of buying from big players, absorbing this downward pressure. That is covered. The last thing I would like to mention also is to show you the sector funds performance for the 5 days and 10 days, because I'm seeing a little bit of rotation to defensive. This is the sector performance for the last 10 days. Look at where's technology down here, consumer discretionary, and look who is up here. Utilities, staples, and healthcare. In the last 10 days, we are seeing clear weakness on the risk on assets, technology, communications, consumer discretionary, and even the 5 days. In 5 days, we are seeing, look at this. Even in the negative, they are up here. Look at where is consumer discretionary. This is quite clear that people is willing to rotate into some defensive sectors. In the 5-day and 10-day time span, we are seeing that. So be really careful, because we might see some continuation to the downside. We are at support. That doesn't mean that we cannot continue lower. I think some players, big players, are trying to build some positions up here at this level. But don't get me wrong, we have potential to continue lower, and we are seeing some people flying to defensive stance in the sector funds. So with all the information that I shared, fundamental data, projections, economy outlook, and also the technical analysis and the patterns that we are seeing, I think you have all the information for you to manage your risk and have patience. That's why I created this channel, for you to really follow my approach, for me to share this information and to improve your trading, your market analysis. And if you have some opportunities and you want to take some trades based on the information that I shared and you agree on that, feel free to do that. But I created this channel for you to learn and for us to share all this information. And that's why I'm here. So if you found this kind of information useful, these kind of videos, the weekly recap, the daily market updates, feel free to give it a like, thank you, and subscribe to the channel, because I'm really interested on building this channel, and without your support, I cannot do that. So I will continue putting this kind of content. Let me know in your comments what kind of content you'd like to see apart from this. I cover a lot of market and a lot of different informations, different approaches from different points of views. At the end of the day, I trade the Nasdaq, but I try to leverage other markets for you to understand my opinion and my vision on the outlook and potential of the Nasdaq. So that's all from my side. I hope you had yesterday a good trading day. You were short. I think you really cashed on this move, but be aware of certain things that I'm seeing defensive, but at the same time, I'm seeing some people willing to take positions for the long-term moves. That doesn't mean that day traders are feeling the pressure. That it's different story. But let's see what happens tomorrow, Friday. Remember, I don't know if we are going to see a big move to the end of the week. In terms of the weekly chart, we are seeing a clear rejection. So be aware of this zone of support. 14,800 is the critical support. So let's see what happens. Thank you for that. Remember that discipline and risk management are key for success. Stay safe, everyone, and see you tomorrow.